In this video, we are going to talk about dividend stocks to buy in 2021. So before starting this video, please like this video and subscribe to this channel for our future updates. Dividend stocks can provide investors with a steady stream of income as well as the possibility of long-term growth. However, not all dividend stocks are good investments, and many investors aren't sure where to begin looking. With that in mind, here is a list of dividend-paying stocks to think about. We provide you with the knowledge you need to pick great dividend stocks yourself below our list of stocks. Get a quick rundown of the most important factors to consider when evaluating dividend payers. There are 5 dividend aristocrats that you should consider purchasing. S&P Indices maintains the Dividend Aristocrats Index, which is a good place to start. This is a group of companies that have increased their dividends for at least 25 years in a row. That means that every company in the index successfully gave investors raises not only during good market times, but also during more volatile downturns, such as the dot-com crash of the early 2000s, the financial crisis of 2008-2009, and the COVID-19 pandemic thus far. They could be a safer bet than the typical dividend-paying stock. Here are 5 great companies to start your search from that index, listed in no particular order and with information about each company. Procter Gamble, NYSE, PG. Procter & Gamble, the world's largest consumer goods company, has raised its dividend for 64 years in a row. Pampers, Downy, Tide, Charmin, Gillette, Head & Shoulders, and Crest, to name a few, are among the company's impressive portfolio of consumer product brands. Not only do these brands give Procter & Gamble a price advantage over competitors, but the majority of their products are necessities that people require regardless of the state of the economy. CocaCola, NYSE, Co. For generations, the beverage behemoth has been a fantastic dividend stock, increasing its dividend for 59 years in a row. While sugary soft drinks may be on the verge of a long-term decline, it's important to remember that Coca-Cola is much more than that. Coca-Cola, for example, owns the Dasani and Smartwater bottled water brands, as well as Minute Maid juices, Simply juices, such as Simply Orange, Honest Tea, Powerade, Vitamin Water, and other brands. Realty Income, NYSE. O. This is a single-tenant retail real estate investment trust, REIT, that invests primarily in single-tenant retail properties. The majority of the tenants run recession-proof businesses such as drug stores, dollar stores, and convenience stores, and they all sign long-term leases with built-in rent increases. Realty Income is one of the Dividend Aristocrats' newest members, having joined the index in January 2020 after 25 consecutive years of dividend increases. It's worth noting that the company hasn't missed a monthly dividend payment to shareholders in over 50 years. Johnson & Johnson, NYSE, J&J. Johnson & Johnson, like Procter & Gamble, owns a portfolio of excellent brands that make products that people need, particularly healthcare products. Johnson & Johnson, in addition to its Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's brands, among others, has large and consistently profitable pharmaceutical and medical device operations, which have allowed the company to increase its dividend for nearly 58 years. Target, NYSE, TGT. You may have noticed a recurring theme here. Target sells products that people require. It has done an excellent job of growing its online and omni-channel sales, for example, by offering curbside pickup, and while sales in some of its departments, such as electronics, may suffer during recessions, it is a well-insulated business in general, which is why it has given investors 49 years of dividend increases. 4 more of the best dividend stocks to buy. The Dividend Aristocrats aren't the only ones to keep an eye on. Many excellent companies haven't paid dividends, or been publicly traded, for long enough to be included in the index, but they can still be good long-term dividend investments. Here's a list of dividend-paying stocks to keep an eye on, including those with strong brands, loyal customer bases, and favorable demographic trends. See below for more information on each company. Verizon, NYSE, VZ. Verizon's wireless communications and high-speed internet customers generate utility-like revenue, and the fact that it has significantly less debt than its competitors appeals to many investors. Verizon has also shifted its focus to its core business, and the transition to 5G mobile technology should benefit the company greatly. Microsoft, Nasdaq. MSFT. Microsoft has steadily increased its sales as one of the world's largest companies, and one of its most appealing features for dividend investors is its focus on recurring, or subscription-based, revenue sources. The company has a strong balance sheet, with more cash than debt and a low payout ratio, which means there's plenty of room for dividend growth. We wouldn't be surprised if Microsoft joins the Dividend Aristocrats club in the near future, given its 19-year dividend hike streak. Apple, Nasdaq, AAPL. Apple has only been paying dividends for a few years, which is understandable given the company's rapid growth in the early years of the iPhone and iPad. When a company is in growth mode, it is common for it to reinvest profits back into the business. Despite this, Apple has an incredibly loyal customer base, and because its devices are designed to work well together, the company has a nice tech ecosystem that should help it maintain its revenue. Apple's subscription services business, which is rapidly expanding, is also providing an increasing source of recurring revenue. Welltower, NYSE. Welltower, a healthcare real estate investment trust, REIT, focused on senior housing, should benefit from a long-term demographic trend as the American population's older age groups gradually grow much larger over the next few decades. When it comes to dividend stocks, there are a few things to keep an eye out for. We'll give you the tools you need to find great dividend stocks on your own, just like we promised earlier in this article. If you're new to dividend investing, it's a good idea to learn about what dividend stocks are and why they're such good investments. A few key concepts can help you find excellent dividend stocks for your portfolio once you have a firm understanding of how dividends work. Payout ratio. The payout ratio of a stock is the amount of money it pays out in dividends per share divided by the amount of money it earns per share. To put it another way, this tells you what percentage of a stock's earnings is distributed to its shareholders. A low payout ratio, say, 60% or less, indicates that the dividend is likely to be sustainable. History of raises. When a company raises its dividend year after year, it's a good sign, especially when it can do so during recessions and other difficult economic times like the COVID-19 pandemic. Revenue and profit growth that has been consistent. Prioritize stability in the companies you consider when looking for the best dividend stocks to invest in for the long term. Erratic revenue, up one year, down the next, and earnings that are inconsistent across the board can be warning signs of trouble. Competitive advantages that are long-lasting. This is, without a doubt, the most crucial feature to search for. A long-term competitive advantage can take many different forms, including proprietary technology, high entry barriers, high customer switching costs, and a strong brand name, to name a few. High yield. There's a reason this is at the bottom of the list. A higher yield is clearly preferable to a lower one, but only if the other four criteria are satisfied. A high dividend yield is only as good as the company that pays it, so compare dividend yields after ensuring that the company is healthy and the payout is consistent. Dividend stocks are long-term investments. Even the most stalwart dividend stocks can, of course, experience significant volatility over short periods of time. There are simply too many market forces that can cause them to rise or fall over the course of days or weeks, many of which have nothing to do with the underlying business. So, while the companies listed above should make excellent long-term dividend investments, don't be too concerned about price fluctuations on a day-to-day basis. Instead, concentrate on locating companies with strong businesses, consistent income streams, and, preferably, strong dividend track records, and the long term will take care of itself. What do you think about our video? Are you planning to invest in a stock? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.